All right, guys, end of the week. What a stressful one. Okay, we're gonna be going over the CAD position because we did hit a take profit. We'll show that. And we're gonna do a quick synopsis of all the volatility and everything that's going down and a quick tip on how to navigate volatility in the future. Okay, it's serious. Let's roll the intro. All right, traders, what's up, guys? Welcome back to the Top Trader channel. It's your head trader here, Cleveland Bishop. End of the week. Guys, relax, have a good weekend. I know I'm getting the hell out of the office this week because obviously markets were quite insane, okay? And that can definitely destroy you if that affected your P&L. There was a lot of people that were commenting, all right, I'm not gonna post the names of the folks, but there were people that commented that volatility did whip them out a bit, okay? Not a lot of folks were buying yen. A lot of people were thinking that they should sell the yen because a lot of folks like to trade pullbacks and things of that sort, right? Well, that's the thing about trading pullbacks. It can be dangerous, okay? So we're gonna talk about the yen in a second. I do wanna show you guys a quick look on what we did on the USDCAD. We talked about the USDCAD yesterday where I was mentioning that we might move stops because of the volatility that was just happening in overall markets. Here's a quick look at that. So we'll see what happens when it comes to this USD CAD. Things are looking really good. We're about to move stops in just a second. And we were hoping that markets would touch back off on this previous structure here. But in case we do get a little volatile, again, stops eventually will be moved into profit, but hopefully we can get the full take profit. Okay, and so if you guys see, USDCAD did pull all the way back down into the structure where we were looking to take it to, which was $1.34. Most of my guys were liquidating at $33.90s, $33.80s, and right now we're still sitting at $33.70s. And the markets, I mean, it's still moving, all right? So CAD, it's a very good looking position. I love the fact that there was a lot of momentum and we didn't have to deal with a lot of volatility. Here, I can go to the 30-minute and you guys will see there was not a lot of up and down motion in regards to, you know, markets whipping anybody out. So there shouldn't have been anyone that had stops hit in any capacity. All you had was consolidation during the Asian session. And then subsequently after that, you just had a lot of sell side come on in, one minor up move. But other than that, the market has been going sell side ever since. And of course, this is still correlated back over to oil prices. CAD is moving up right now because oil is moving up right now as well. Here's a 4-hour on oil. You guys can see that the structure that we were looking for on Wednesday, all right, we mentioned Wednesday that we wanted to see a break of this simple area here. It's a zone, but I'll throw up just a line for right now. But we're looking for a break right there at that structure. Guys, go watch the Wednesday breakdown to help you rationalize exactly what we're talking about and looking for this week, and then just continue along. We've made a video in between then and this one right here, right now. Okay, so CAD was great. CAD was the one situation where we had a momentous move and not too much volatility. And today I do want to talk to you guys about volatility and what volatility means when it comes to a portfolio, when it comes to markets, and so on and so forth. Volatility is nothing more than the degree of fluctuation of the price of any asset, right? So in a low volatile environment, there isn't a lot of opportunities to make money, right? Because markets are structured. They're not making any moves. Think of Apple for an entire 6-month run, for example, right? I'm just using a stock because people can rationalize stocks a lot better than they can rationalize currencies. But think if Apple was sitting inside of a range of $100 and $110, right? A 10 pip consolidation or a 10 pip spread in terms of where price has been is very, very low. And in that type of environment, it's hard to make money for a trader. In a high volatile environment, there's obviously a lot of opportunity to make money. Right here, we'll go over to the JPY. We just talked about the flash crash yesterday. In this type of environment, folks, yes, it is capable if you are on the right side of these positions to make money. Here, we'll pull up the Euro JPY, for example. This is true volatility. This is volatility at its finest. Why is that the case? Well, look at the daily, or here, let's go to the 4-hour. All right. What happened, folks? We had markets literally rip sell side over 500 pips, and now they're trading back to the upside. So we had a massive directional move in the asset, only for that directional move to revert back and turn around on itself. Okay, that is very dangerous. The euro has been in a very volatile state all throughout 2018, where we can look at a pair like the Euro CHF, for example. All right, so this is a pair where, again, if you're trading this pair from an intraday or weekly perspective, it was hard to make money. Take a look. You do have a sell side move happening, but look at all the up moves you're having to face, you know, along the way. You have a sell side move, you get your breakout of structure at the low, but then you have markets pull right back up into structure. And then even after that, you have a test of the consolidation. you break the low again here, and then what happens? You test that same structure again, right? You push sell side another time, and then you go back to that exact same structure. So you're making lower lows, but the fact that you're having such large pullbacks every time you go low, think about what happens. Let's say you wanted to trade, a particular pullback, hoping for an extension lower. Okay, well, you got a solid extension, okay, but you had such a massive push back up in the opposite direction, you more than likely would have gotten pulled out of that position. And we're just looking at it from the daily. We're ignoring the wicks along the way here, right? So if we go over to a 4-hour, for example, look at this chop that you're seeing even just right now in this market, right? So this is definitely considered a highly volatile currency pair, at the moment. Massive move to the upside, massive move to the sell side, and then vice versa. Again, you get your extensions, but then out of nowhere, you get this massive pullback. So the way you navigate volatility usually is by increasing what we call here in the Top Trader community, the stop to entry spread. Okay, so let's say you have a pip target where usually on maybe some other calmer currency pair, you have a 100 pip target. Well, in many instances, you can have maybe a 50 pip stop, a 60 pip stop, so on and so forth, right? Maybe to give you that 2-to-1 reward ratio. But as volatility increases, you're gonna have to widen the stop. You're gonna have to widen the stop and anticipate an increase in volatility. I like to anticipate an increase in volatility on every position. So if I'm in a low volatile environment, I'll create a little bit of an extra margin of error in case I get a little bit of momentum or a little bit of, again, more volatility. Momentum is different from volatility. I'm about to explain that to you guys in a second. So again, let's say I'm looking for markets to pull back and retest this base here. This is called the launch point for us, where markets break out of a certain area. You get this consolidated low, then a break up in a structure. Let's say I'm looking for markets to retest that. Well, if we pull on over, boom, we got our retest. So this is where my entry is. And logically, yes, you should put your stop right below structure, right? That's the protocol for everyone. But anticipating extra volatility, I would actually want to put my stop a little bit lower than that probably, right? So I want to put my stop way out of structure, way out of the danger zone, quote unquote, and then hope that markets continue and then break to the upside. And in this random situation, we never got the retest. But this little sell side move, that failure could have easily happened a lot earlier, and then we could have had that failure push back down into this structure. So for example, markets failed at the high once and they pulled back and almost retested the low. Well, in many situations, you can have markets just fail at the low of the previous consolidation. And then this move up could have happened much further down, which means markets could have pulled back inside of my consolidation. And if I didn't anticipate that, then I could have easily gotten stopped out and then markets move in my direction. This is one of the bigger problems that rookie traders have. What do they always say? Oh yeah, I got whipped out of the trade and then it pulls into the buy position that I was looking for, right? Because most of the time you're probably correct in the direction of the move you think the market's gonna go. The only problem is making sure you're in that move, okay? Making sure you're able to tolerate the whip flash, okay? So again, volatility adds a lot of noise and a lot of madness to anyone's portfolio, guys, and you have to take the proper protocol to put yourself in a situation to where you are not getting taken out by volatility, and it's not the demise, all right, of you as a profitable trader, okay? And so again, I'm gonna go over momentum a little bit later on, but just a clear difference between volatility and momentum. Volatility is nothing more than a degree of fluctuation, just the random price movements, right? But momentum, on the other hand, what we experienced with that USDCAD, you gotta love momentum, because momentum in your direction is beautiful, okay? This is momentum. Momentum is nothing more than the flow of current market price because of an actual fundamental or potentially technical reason. This is a momentous move to the sell side for the USDCAD. That's what you want to see. You don't want to see a volatile, momentous move to the sell side, because that could potentially whip you out, right? So it's a lot to discuss. Again, we talk about these things a lot inside of our community. You guys can click the link below to get access to that. But this should be a little bit of an introduction or a prelude to you getting into the understanding of volatility overall, okay? So again, this week was insane. I expect 2019 to continue along with this same style, all right? So you're gonna have to acclimate. If not, you're going to get burned, all right? So outside of that, guys, we're going to shoot a Monday market breakdown this Monday. Make sure you guys are subscribed and turn on the post notifications as well, so you guys can be notified immediately what's going on, because stuff happens really quick. And so the sooner you watch the video, the sooner you'll be able to act on those moves. And also let me know what you guys want to see next week when it comes to our trader tips Everyone loves the Trader Tip series. So again, whatever it is, a deeper explanation of volatility, momentum, something dealing with risk management, psychology. I don't know what you guys want. I'm here to help. Okay, so let me know in the comment section below what you guys want me to talk about in regards to our Trader Tips. I will see you guys on Monday. Relax, pull back this weekend. Okay, let's hope that we don't have the mess that we had this week. And if we do, let's hope we're on the right side of that move. Okay, guys, look, I'll talk to you later. Peace.